that I think that the commission-based model for loan originators is dying. And I think that we at Housing Nonprofit may be the ones to kill it.
Welcome to the Full Disclosure, the mortgage podcast where we talk about what's really going on behind the scenes. I'm your host, Nora, co-founder of Morty, the all-in-one platform for mortgage. I'm really pleased to welcome our guest today, Janco Damas, the founder and executive director of Housing Nonprofit. Janco joins us from the great state of Florida. A little bit more about Janco. Janco is the founder and executive director at housingnonprofit.com, a nonprofit mortgage originator. He previously worked at Ocwen Financial, a mortgage servicing firm, where he worked in both communications and marketing. After Ocwen was acquired, Janco had the opportunity to pursue his passion, which he did when he founded Housing Nonprofit, which helps home buyers access and secure mortgages, leveraging down payment assistance programs. Welcome, Janco. We're really thrilled to have you here today.
Thank you so much.
You have $10K in marketing budget. Where does it go? Meta, Google, or Reddit?
Google Ads.
Who has the best food, Miami, Tampa, or Orlando?
Miami.
Is Baker Mayfield worth $33 million a year?
Yeah, because what's the other option? But yeah, I'd say so.
What's the best beach in Florida?
Boca Raton Beach, off of Palmetto. Nice and quiet. There's parking there. Yeah.
And last question, if you weren't working in the housing industry, what industry would you be in?
Marketing and data. Marketing and data.
Awesome. Well, let's jump right into things. Janco, what's your full disclosure?
My full disclosure. Okay. My full disclosure is that I think that the commission-based model for loan originators is dying. And I think that we at Housing Nonprofit may be the ones to kill it.
Whoa, that's a big one. Why is it? Tell me more. Why is it dying?
Yeah, I think fundamentally there's a truth out there that we're either not talking about or just tiptoeing around or whatever. But the interest of the borrower and the loan originator are competing, right? So the borrower wants to spend as little as possible, whereas the loan originator, they may have an option between 5.5 or 7.5%, and not saying that there's any sort of amoral activity or anything like that, but they've got a business to keep in mind. They've got a family, a mortgage themselves. So they're going to do what's in their best interest, which is fine, but that's going to cost the borrower, during the lifetime of this loan, a whole lot of money, and so when you have particularly, low to middle income people who are trying to build some wealth and some generational wealth as well, it's a big deal. And I think that people are looking for an alternative, policymakers are looking for an alternative. And once the people find out that there's a nonprofit mortgage solution out there, I don't think they'll want to go back.
It actually makes me think about how taxes have been handled traditionally, in the fact that you have some big firms that have storefronts where people can go and get their taxes done, but also you can go to nonprofits to get your taxes done for free. So just a little bit of history on me. I worked in nonprofit world before I was an engineer and before we founded Morty, and I worked at a community action agency. We used to do people's taxes. So that's why I say that I know that happens in the tax world, but I feel like mortgage is so personal. It's so, you have a realtor who knows the loan officer, and it's creating trust for this really huge transaction that you're going to do once in your life, or, maybe 4 times in your life, as opposed to taxes, which you do every single year. So maybe you get used to going to your local nonprofit or community center to do it. Talk to me a little bit about how you feel like your nonprofit, or nonprofits in general, can sort of jump that trust barrier that is often created, and the reason why people go to an individual person who might be charging a commission.
Yeah. So that trust barrier, I think, is really important. Um, and when I was looking at the opportunity, like I had to come up with a way to build trust immediately. And the way that we tried to accomplish that was by our name. It's no frills. It's just housing and nonprofit. And then, on our website, we try to remove any kind of sort of distractions, and we tell people up front that, like, look, we're your kind of nonprofit partner. Um, like when you compare it to taxes, I think that's a pretty good comparison. Folks who are in the low to middle income, they have an option to file their taxes for free. Whereas folks who are low to middle income in the mortgage space, generally you're going to see that their mortgages are more expensive.
Right.
You know,
Especially with
um,
mortgage insurance.
right, with mortgage insurance, and then um, just if for example, if there's a DPA involved, oftentimes, like, what I see is that DPA, the agencies typically allow you to charge like 2 percentage points above the Freddie Mac primary market survey. So
Mm-hmm.
let's say the market survey is at 5.5, and a loan originator is looking at it, and they have the option of putting them into this 5.5 or something a little bit higher, knowing that they're going to have to underwrite both the primary mortgage and the DPA. Like, it would be fair for them to say, all right, well, we're going to kick the premium up a bit, and then for them, it's going to mean an extra $800 in commission. But for the borrower, over the course of 30 years on a $300,000 loan, that means that they're paying like an extra $50,000, and that's, I find that kind of unfair. So we don't do that. We give them the best price option that we can every time. Now, that's where the nonprofit part comes in, because we ultimately end up doing this work, and we take the loss for it. But we are learning a lot. We're forcing ourselves to streamline and to do things kind of more efficiently, and to fundamentally, to us, like, we're building a bigger funnel. So we're trying to find those streamlined opportunities that come with greater scale.
One of the challenges that Morty felt very early when we were a D2C business was the lack of education, or just like the lack of knowledge on the home buyer side, in terms of how the commission structure works, and why potentially a lower commission is beneficial for them, and like how all that sort of math and fees get bundled into the loan amount. I'm curious, from your perspective, how you go about kind of educating, or communicating, really is the right word, communicating with the borrower what your value proposition is, and how you are different than going a more traditional route at a bank.
It's really hard. Um, it's really hard, and, like, if you try to give them the full amount of details, like, a lot of times you end up causing more confusion. For me, I think what's really effective and what's really powerful is to show them offers from multiple lenders,
Mm.
and so that they can get a comparison. One thing that we can afford to do is we offer what's called a fairness opinion. So increasingly, people have been finding our ads online, and they will send us their existing loan estimate, and 9 times out of 10 will beat it, and then now sometimes what's been happening is they take that new loan estimate that we give them, and they go back and try to negotiate with their current lender, and we want to be in position to say that like that's okay. Like right now, obviously that's a financial hit for us, particularly if we invest time. But we want to be in position to be able to say like that's okay and provide people that service so they can ultimately know that they're getting the best deal.
Yeah, absolutely. I feel like that sort of catch 22 is is a real challenge when you're going basically from any type of service where you get a commission to a flat fee.
Yeah.
I'm I'm curious how like the down payment, how like w- how much did you know about down payment assistance programs before you founded Housing Nonprofit?
Yeah, that's an interesting question. So, um, before I started as a nonprofit, but after I left Auckland, I joined a marketing agency. We were pretty boutique at the time, but I spent 5 years there and rose to be VP of display and email marketing. And so the reason that I know about housing grants is like we used to do research on what people were searching on Google, and we just saw there's just a very acute pain point around housing and being able to afford housing. And a lot of times that means people are trying to bridge, they're trying to get the money for the down payment. And so as a marketer at the time, I used to leverage that pain point to kind of to bring people in. And then we used to introduce them to insurance products, to cell phones, to like car refinance, like everything except for housing grants and DPA. And so eventually I started like looking into what's actually available, like what are the tangible products that are there. And the first assignment that we had at Housing Nonprofit was to create a comprehensive database of DPA programs across the country. And, once we built the tech stack to be able to do that, we started seeing that there were a lot of kind of similarities. They all kind of share a similar structure. And the main thing that you need to make a DPA work is a primary mortgage. And that's how we started heading down the path of like, well, okay, so how do we offer a primary mortgage? Got licensed and connected with Morty to be able to do that. And then it's just been about, becoming better at structuring those mortgages with DPA. Now, I think the fundamental thing that we still do very well is like meeting people online, like when they're searching for these products, and we've gotten much better at that, and our metrics and our costs are starting to like decrease while our conversions are increasing as well.
And that's based on the fact that you have so much experience and expertise in essentially funnel optimization. So you're able to really find the people that can benefit from your service.
Yeah, and the other reason that we can do that is because we have the budget to mess around and to try things.
Right.
We have a grant from Google that allows us to do free paid search. So when it's a pretty substantial $120,000 a year, and so when we first started, like we were spending $50 on a click, and then it went down to 25, then it was in the low 20s, and then 15s, and now we're like in the tens. So now it's about trying to maximize the conversions for those clicks, and
Yep.
Other this isn't I wouldn't recommend this space for other mortgage loan originators because it's like very expensive to learn.
Yeah.
But as a nonprofit, we had that budget to be able to do that.
I'm curious when you think about the customers or the clients that come in through that funnel or through other networks to Housing Nonprofit, um, are they typically folks who are first-time homebuyers?
Definitely. We get a kind of a good handful of folks who already own a home, or they may own a home and they're looking to move somewhere else. A lot of times it's like it's not practical because they're not making enough income to keep both homes. But increasingly, we are having an opportunity to like have those conversations with folks who want to do like investment property or rental property. So at the moment, we're kind of telling them that we can't really do much, but thanks for calling. But in the future, I think we will be able to put them into another funnel and just kind of keep in touch with them over time and eventually service them.
Yeah.
But yeah, for the most part, everyone else is first time home buyers.
I'm curious. So I'm going to make an assumption and you can tell me if I'm wrong, but the first time home buyers that are coming through, they're probably renting a home right now. And
Yeah.
so I'm curious if you end up having a lot of conversations about the cost benefit around rent to own.
Okay. Yeah, important distinction there. So the rent versus own, that's always top of mind. One of the preliminary questions to starting a conversation is like if you're currently renting, where you're renting, and how much you're currently paying for rent.
Yep.
And I already have their information because they completed our application. So if I can tell them right away that, oh, you're paying 1,800 currently, it looks like your mortgage and based on where you live, taxes and everything, you might be 1,600 all in. Conversation is going to go pretty smooth after that, but that's not always the case. Sometimes they want to go into condos that have like massive HOA, so you just have to tactfully kind of manage their expectations.
Yep. And have you thought at all about or have an opinion about some of the rent to own products that exist out there?
Yeah, as a marketer, that used to be huge business, and we used to make a lot of money off of that. But as to whether or not they actually provide value, I think is I haven't seen a lot of like real value created in those situations. I know that they can be structured in a way to where they legitimately lead to home ownership, but I think that middle person is there's a lot of people who are trying to get paid in the transaction. Fair enough, but I haven't seen a program that created a whole lot of value for the actual person hoping to become a homeowner.
Yeah, I agree completely. I feel like if I was advising somebody on the best way towards home ownership, the rent to own program does not seem better for them than rent until you can have enough for a down payment and then go and buy.
Right, right. And then if they're middle income, I think they really should have a conversation with somebody about DPA programs as well.
Right.
I think these days, I think there's enough solutions out there to where you can, get a mortgage with like very little down.
Right.
Probably, if anything, what they need to focus on is probably paying down their debt,
Right.
improving their credit profile.
And there are tons of programs that are helpful on that. So it feels like if somebody if you're advising somebody on how to get from being a renter to being a homeowner, there are more cost-effective solutions and probably faster solutions to truly owning your own home and building equity in your own home through these other types of financial solutions.
Right,
Which brings me
right.
to another question I have for you. Like, as you think about housing nonprofit and how you guys are going to grow over time, I feel like there is potentially a natural evolution of wanting to help um, create financial tools overall for your customers, since housing and homeownership is often the largest financial transaction that people are making in their life. It's not the only financial transaction, and
Mhm.
it helps to have a holistic view on them. I mean, that gets to a lot of things about the Morty profile and how we've built our technology. But when you think about how you're serving your customers, how do you think about serving their entire sort of financial needs?
Look, I definitely I think about it and I see opportunity there. I don't think that we have the bandwidth at the moment to be able to really focus on that. But like as we get better and better at reaching people, and we're also, 95% of the people who come in are like, or 90% of who come in are not mortgage ready. So we built a network of nonprofit housing counselors, HUD certified housing
Mm.
counselors, and so we'll send them, we'll connect them to one of those. And we'll also include with them like, here's what we're targeting in terms of like DTI credit, and here's their target purchase price. So they'll continue to work with them, and there's probably an opportunity there to find their other needs and have the counselor kind of report back to us. So I think we're going to try to establish that infrastructure first. We're going to get we're working with like maybe 7 or 8 housing counseling agencies now. We're going to try to get up to 20. We're going to try to get them all the ad grant that we have. So we're going to be 20 times $10,000 a month, $200,000 a month in ad spend. And I'm just trying to figure out like, there's a lot of opportunity what we can do with that. So we're just kind of trying to set up the unit economics to make sure that makes sense.
Yeah, that makes a lot of sense. Do you work with home buyers across the country, or are you mostly focused in Florida?
For capacity, we're targeting people in Florida, Palm Beach, Broward, Tampa, Central Florida, Jacksonville. We have a lot of applications coming in there, but incidentally, like the appeal of down payment assistance, I think, is bringing in people from like across the country. I'll still like take those conversations to see what we can learn from them, but for the moment, yeah, we're just doing Florida.
What advice would you give to a loan officer who wanted to be able to better educate their client base or better serve their client base with down payment assistance programs, but maybe doesn't have any experience or doesn't know much about them?
I think the first thing would be to get that experience, and I think you have to settle in that your first couple mortgages with DPA are going to take a long time,
How long?
and at the very least 45 days, because you're underwriting 2 products, one for the primary lender, another one for the housing agency. And if you want to be a part of that world, like I think you need to become friends with the housing agencies. You need to kind of understand what they do, what their objectives are. And I think you need to build some technology so you can stay up to date on what's going on with their products. But if you're willing, like, to invest the time, then you just become more familiar. The more that you know yourself, the more you can offer to your clients.
I'm curious, when you say you have to become more familiar with HUD, is that on a local level, like, or state level, or is that on a federal level?
Well, so there's DPA that kind of is very much influenced on the federal level, but most of the time you're going to be dealing with either state, county, or city administrators.
Mhm.
So if you want your business just to be local, then yeah, you have to focus on city and county administrators. If you want to do statewide, then every state has their own state level housing agency that manages the federal funds that come to them.
Yep.
So if you want to see how that money is trickling down all the way down, then like yeah, definitely become familiar with your state people too. But like start locally, city and county.
How did you do that? Did you just reach out to them?
No, so at first we scraped all the data that was available. So we started that end. We started with some paid subscriptions, and then we built our own bot to go and to find the language that describes these things and put them all into a database. But once we got beyond that, every time we got a new application who was interested, we had to go beyond the data that we scraped and reach out to them and say, hey, do you have availability? And so that was how we started. And then now I also participate in a few like the Florida Housing Coalition or Florida Housing Finance Corporation. Like I participate in those. I host like webinars just to kind of get to know those people, and so they can get to know me as well.
And are they receptive? Has that been like an effective strategy?
Yeah, they're very much open to it. They see that sometimes they put someone in a product with DPA, and at the end of 30 years, they end up paying more than they would have if they went with just a conventional product. And
Yeah.
I mean, they hate that because it doesn't meet the entire objective. So they're open to solutions. Obviously it's government, so they are missing some technology. Sometimes we have to mail in applications, so they see the opportunity and they like, fresh blood in there. So I guess I'm the sacrificial lamb.
um, okay, I know we're getting towards the end. I'm curious if you kind of like take a step back from all of this. Do you feel like the housing environment and world is going to get better in the US for people, for middle low income folks who are looking towards homeownership as a way to create wealth, stability, security, etc.? Or do you think it's going to get harder, more challenging, etc.?
I think it's going to get much better. Um, there's a lot of waste in like the processing of a mortgage, and the more hands that are involved, the more people that need to get paid. But as we start to embrace technology and consumers become smarter too, I think like there's opportunity to streamline what's created there. And then I think a lot of things like kind of change over time, but the benefits of home ownership, I think, remain very consistent. And in the nonprofit community, the general community, like trying to uplift people, I think like they continue to speak about home ownership, and so I think there's like information that's being pumped to the general masses and a general awareness that's starting to increase. So I think there's very little chance that it's not going to improve in the long run.
I like that. Optimism. I'm
Yeah, but
optimistic
I
too.
mean, yeah, you gotta be.
I mean, or else what are we doing?
Yeah, I mean, you're certainly in the beginning stages. Like, you gotta like you invest your own time, your own money.
Yep.
You walk around trying to get support, and like these days you gotta have like some bigger vision.
Yep. Amazing. Janco, this was so fun and really educational for me. Before we wrap, I wanted to give you the opportunity to self promote, share anything else you want to share about Housing Nonprofit, and maybe also give like the URL where people can go to connect with you.
Yeah, so we're housingnonprofit.com. We're very consumer friendly, so most of our front facing stuff is going to be just about housing grants. Fundamentally, we connect people with housing grants to buy a home. On the back end, like we're definitely building a network of people who are trying to improve affordable housing. So if you are trying to work in that space, or if you're a counselor, or just in general, I'd say like reach out to us. Let's talk. Let's have a conversation. If you are a marketing professional as well, if you know a lot about data, I'd say reach out. Let's have a conversation about that. And let's get it going. There's definitely some opportunity out there.
I love it. Amazing. Thank you so much, Janco. This was really fun.
No, thank you as well, and thank you for like all the work that you're doing.
Right back at you. That's a wrap for today. Thanks for joining us. And remember to like, share, and subscribe so you never miss another episode. And remember, you can't close if you don't disclose.